Now, a stock like ELF, this is the biggest gainer for the portfolio, right? We got a lot of, stocks that have done it very well, but nothing like ELF, right? 1,400+% gain. Good old ELF on the shelf, it represents over 6% of the portfolio. By the way, if I held all my ELF shares, ELF would be probably the biggest position in the portfolio today. If I had just held all my ELF shares, instead I was a dork and I sold a bunch of my shares over time, okay? Now, ELF is another extremely controversial stock because I'm telling you, this company is going to look expensive. I'm telling you, okay? So, as far as what analysts have this company doing, so we're going to look at the 2025 numbers because of their fiscal year ends at a weird time period, right? Trades at a 51 forward PE. Seems very expensive. This isn't even a tech company, it's a cosmetics company, right? And as far as what analysts have them growing next year, only 13-14%, right? But here's the thing about ELF, right? And I think this is very important. And you got to remember this for all future stocks you own, because this could be what dictates ultimately where that stock price goes over time. When it comes to ELF, this is a company and a management team that has done nothing but surprise to the upside for years. Years. They've done nothing but just smash numbers and smash estimates and revenue estimates and EPS estimates and gross margin estimates quarter after quarter after quarter for years now at this point in time. So when you have a management team like that, when you have a business like that, you have to give them much more respect and credit than the rest of the market. Because you might be thinking, they might grow 13-14% revenues next year. But given the shocking numbers this company's put up over the years, there's a potential this company grows 20% or 30% next year, right? And there's a potential this forward PE for next year's numbers is actually truly really out of 35 right now, or 40. You can't automatically assume that companies will beat estimates and things like that if they don't have a track record of that. But for a company like ELF, they have an insane track record of just shocking shareholders again and again and again. And just when you think, this has to be the time the business slows down, they come through with another number and it's like, oh my gosh, are you kidding me? How do you think this stock went up 1,400+% since I owned it? Like, how does that happen? In order for that to happen, you need to come through with shocking numbers quarter after quarter after quarter for years. It's exactly what Tesla did. That's why Tesla's a 10x stock, right? You have to do that. And so when I look at a stock like ELF, it remains a hold for me. The stock looks expensive on just valuation metrics, but, I've regretted every share I've ever sold of ELF. Not just because the stock's gone up dramatically since I sold most of my shares, right? But for the mere fact that we got a management team here that just tears it up. Like, well, why would I bet against them, right? So that's ELF on the shelf. So now, Monday after the bell, Whirlpool's reporting earnings. Now, this is an interesting stock. It's a stock that has done pretty much nothing over the past 5 years. You do get to collect a nice dividend with this stock. It pays about a 4.7% dividend yield. And I'm really interested to hear Whirlpool numbers. I kind of hope this stock tanks. I actually do want to buy this stock in my dividend-only account and build a nice position in there. But it's really going to be intriguing because we have the most confusing real estate market we've probably ever had in the United States of America, or certainly in modern times. It is extremely confusing because you have existing home sales that are awful right now. I mean, absolutely awful. We're at numbers right now that we were around like Rona, like March of 2020, April of 2020, when everybody was in lockdowns and no one cared to buy a house or anything like that, right? We're in those sorts of numbers right now, which is shocking. Absolutely shocking. So existing home sales are awful, right? Which is something that should certainly hurt somebody like Whirlpool's business. But on the flip side, you got new home sales that are amazing. I mean, absolutely amazing. These are new home sales. I mean, look at the numbers. I mean, we're way stronger than we were in 2014, 2016, even stronger than we were in 2018, right? And so this is a very confusing housing market. I think part of it is just people being locked in at super low interest rates and just not wanting to sell their homes right now, right? And so at some point, something's going to happen in this housing market. Either the economy is going to get hit really hard and then people are going to be forced to sell their homes and things like that, or we're going to have a dynamic where interest rates eventually come down and that helps the housing market and existing home sales start going back up, right? Especially if mortgage rates start dropping at some point later this year or next year. or we're going to have a dynamic where interest rates are going to get even worse and eventually the housing market is going to crash because it will crash the economy, okay? So we have a few different scenarios, but it's an interesting time now. But somebody like Whirlpool, they can benefit from obviously new home sales because guess what? You buy a new home, you still need to get a bunch of appliances and things like that, right? But existing home sales being so bad right now is really hurt Whirlpool in a significant way because Whirlpool gets a certain amount of business from people that just, their washer, their dryer, their oven, whatever breaks, so they need to go get a new one. But they get a lot of business from people buying a new house, moving into a new house, whether it's existing or brand new, and going ahead and buying new appliances. And so that business is just in a shaky spot right now. So I'm really interested to hear their earnings, right? Palantir, let's drop a tier for Palantir, okay? So Palantir, by the way, no company I'm more excited to see their earnings, guidance, and listen to a conference call than Palantir for this earnings season. They are the number one stock I'm excited to pay attention to, just to be quite frank. I'm so excited about Palantir. I mean, this is a huge quarter for them, huge quarter for Karp and the team to put up the numbers and say, we've got it like that. Our AI product is getting out there in mass, and, we're going to have a lot of deals coming through over the next few quarters. So, insignificant deals, right? So when it comes to Palantir, the company's trading at 2024 PE of 66. Looks extremely rich. Now, first thing you got to understand about a company like Palantir, this is extremely important, is this company gets put into the category of basically kind of like a SaaS business. Now, like a software as a service business, SaaS business. Now, these type of business models command much bigger PE ratios than an average stock in the stock market. And the reason being is they're seen as some of the holy grail business models, some of the safest business models, because they work very closely with companies, and it's very hard, and their products are very sticky, and it's hard to just go to another product, right? It's not like, a food store where, you can eat this food store or that food store, you can get your food at whatever store, right? I got 5 different food stores probably within 5 minutes of my house. And whoever has the best pricing, well, I don't really go food shopping, but I'm sure my wife would pick whatever one has the best value for your dollar, right? And when it comes to these SaaS business models, it's just hard to break up with them. Once you integrate them inside your business to then go ahead and use something else, it's a very, 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 very difficult and delicate decision, right? A DD. So that's just something to keep in mind there. So 66 PE based upon 2024 numbers. Now, the company's expected to have 19% revenue growth in 2024, right? Now, based upon what Karp's talking about, right? Based upon the way he's been talking recently, I think they're going to grow a lot faster. And I mean a lot faster than the numbers that analysts have at this given moment. Like, based upon the way Karp's talking, I don't see there being any way they don't grow in the 20 to 30% range, to be quite honest, right? And there is always this possible scenario, and this is something everybody needs to take into account with Palantir. There is a potential scenario when it comes to Palantir that they do something like NVIDIA did, where they come through with such a shocking number that everybody goes, oh my gosh, like really? They're growing like that? Like imagine if on the conference call, after Palantir reports earnings, imagine if on the conference call or in the shareholder presentation or whatever, Alex Karp says, we're back on track to start hitting 30% plus revenue growth next quarter, and that's our expectation moving forward. We're going to grow this business 30% plus a quarter. Everybody would flip their flapjacks over that. It would be insanity, right? Because no one's anticipating that. Now with Palantir, everybody's thinking, 15 to 19% growth type company moving forward. If they go back to the 30% number, oh my gosh, do you know what happens to that stock price immediately? It would be insane, right? Now, another huge factor that people need to take into account when it comes to Palantir stock price while we're on the subject, and this shouldn't be forgotten, but if the company comes in and has another profitable quarter this quarter, which it should be, it's going to look like S&P 500 inclusions likely coming at the end of this year, beginning of 2024, which is another huge thing for the stock price. So if you want to talk about Palantir going from $16 to its next double, let's call it $32, how do they do that? Come in and be profitable again, so it's almost guaranteed you're going to get an S&P 500. Say you're going to get back to 30% plus growth. They do that. That's how that stock gets to the next double. That's how it goes from a 16 to a 32, okay? Literally those two things. That's all it needs. all it needs, because the run up going into the SP 500 would be insane. And then obviously, if you're talking about getting back to 30% growth, that changes everything with this business model. That changes the way then it would be viewed as a hyper growth company again, if they can start growing 30% plus again. And it would be viewed as obviously, a much more profitable business model than anybody anticipated. Because if they start putting up 30% type revenue growth again, I can tell you that EPS is going to look like a joke compared to the numbers they would actually put up. So, you don't want to get your hopes up too much about that. There's also a potential that, they just kind of put up these sorts of numbers. But I think with the way the stock's been running, I think people are expecting more from this company. And especially with the products that they have in the market and with the AI opportunity, I think there's more to be had here, right?